Starting chapter 6, accounts payable stands for vendors, all activity of a vendor. You can enter the vendor and then keep track of the vendor's activity. So first, we're going to talk about vendors and expenses in chapter 6, only for regular service company. Then we're going to go into inventory for merchandising company. So chapter 6 is easier than chapter 7. So vendors and expenses is the category. Under reports, you will have vendors and expenses as well. So that's where you're going to find all accounts payable. Of course, last week we did customers and sales. That's accounts receivable. So first you start with vendor navigation. You'll see a vendor list. Everything is in the margin. It's no job costing over here. Vendor transactions could be accounts payable, starting with a purchase order. Then you receive the bill, and then you're going to get into payment. So usually 3 things. If it's just service, it's only enter bills, pay bills. That's chapter 6 concentrating on. And then you're going to get vendor reports, like agings of how old is the bill. And you will get also reports of like a graph, and it shows you open bills and things like that. Okay, so they're really concentrating on chapter 6 on 2 things: how to regular enter bills and pay bills for service company, like utility bill, even rent as a bill, and then everything in pay bills. So this is a 2 steps way instead of just writing a check. This is definitely much better than write check, because when you write a check, you can write checks every day, but you will not keep track of how much money you spend every month. So that's the limitation of when you're writing checks. If you're writing checks the whole month and I'll ask you how much are you spending a month, you'll be clueless because you don't keep track of it in your head. How much money did I spend this month? But if you enter bills and you're writing a check, once you're really doing the pay bills once a month, you will see how much you owe. And then you'll know, okay, I'm spending $30,000 a month on this business and accounts payable. I'm spending 25, you will know. So enter bills, pay bills, the 2 steps report is much better. Also, the business has paperwork that they approve these bills. In the paper, it's called check request, and until a check is issued. Another name of this is a voucher system. So if you're following a voucher system with paperwork behind any you're asking to issue, it's a much better accounting software. What does it mean? You might have ad in a newspaper, and you have to enter just the ad. So you're going to enter a bill, New York Times, $200. But the actual check request has the paperwork to show that this is the ad in the newspaper that you might even be cutting from the paper. And then your boss will pay it. But if it's not having any backup papers, they might not pay it. So it needs to be issued and authorized. Okay, and the vendor list contains the information of each vendor, of course, his address, telephone numbers, and credit terms. Vendor information is entered on the vendor list, and after that, you're going to see that QuickBooks automatically will take this information to the correct check. So 2 steps. First is enter bills, second is pay bills. And the longer one, which is chapter 7, we're going to start with enter purchase order, receive inventory, enter bills against inventory, and pay bills. So 1, 2, 3, 4 is when you're dealing with merchandise. But if it's a regular service bill like telephone, water bill, all those things are just enter bills, pay bills. Your accountant sends you a bill, your lawyer sends you a bill, it's just enter bill, pay bills, because those are services. So utilities and all services are basically going to be chapter 6. Chapter 7, we're going to start with inventory, when you're actually buying inventory. So you're purchasing inventory and there's more paperwork. But they are connected. So 6 and 7, I usually teach at the same time. Okay, so we're starting with number 1, enter bills, and we're going to go into pay bills. Example, after entering the bill, you go to the next step, pay bill. Example will be insurance. Later, we're going to get a report, accounts payable report. So all these reports are under vendors and payables. Purchase reports, inventory reports, many reports that come up from doing this paperwork. You'll go to report center, report menu, and vendor center. You can access all the reports from all these 3 groups. I like report menus because it's faster. You don't have visuals. Report center does have visuals. It takes a little bit longer. And the vendor center, you can choose only what you want to see on each vendor. So you can get beautiful reports. Okay, so this is in a nutshell, chapter 6. We'll go into 7 soon. I'm going to share now QuickBooks. No. Oh yeah, I found QuickBooks. It's open. It's on install later. 1 second. Okay, so this is my initial screen. I'm going to work with Rockcastle. So I'll use Rockcastle Construction that I used in chapter 1, 2, and 3, and so on. I worked with the same company. Same date, December 15, 2022. Remember, some of you are using the new updated 2019, so you will have here 12/15/2023. Just notice that it's a year ahead. And I'm using 2022. Okay, so I'm using chapter 6 with the book. And the information that we have is to create a new vendor. Okay, so first you close the accountant center. Then you're going to close. Okay, so close the accountant center, go to vendor center. From the home screen, vendor center is right here on top. This whole section is accounts payable, where you see purchase order, receive inventory, enter bills against inventory, and enter bills are here, pay bills. And you also have managed sales tax. Okay, so managed sales tax, it's created by creating an invoice, so we're charging for sales tax. But managed sales tax over here means to pay sales tax. It becomes sales tax payable. That's the account that was created on the invoices. So managed sales tax belongs here because we pay sales tax. Okay, so now we're starting with regular vendors. Clicking on vendors. Vendor information, you see everything is in a margin. It's not like customers. If you want to remember, look at customers view. You see right away that you're in customer because there are jobs under the name of the customers. So we don't have that in vendors. Vendors is everything going to be in the margins. And they want us to type a new vendor. So I'm going to start with that. Enter new vendor. On the top, you have new vendor, or you can press Control letter N. You're in the right screen. So you will get a new vendor. The vendor name will be Andre Windows and Doors. Okay. Andre Windows and Doors. Okay, and we type that again. Type it in company name. Type it also, it's automatically down here. Then I can press enter and right away finish the address. 27, I went down there, 27 Beach Street. It doesn't need to be in caps, but you can type whatever you want. Bayshore, California, 94326. Okay, so I'm finishing with this area. And if it's the same vendor, you know, billing and shipping the same, so I just write copy and okay, so I got it in both addresses. If you know the person's name, you could type the person name, like his main is Mr. This is really this part is more to if you're writing them a letter later. So it will be this term, Mr. Lafont, let's say, to be aware that you're mailing them a letter to Mr. This Lafont instead of just Andre Windows and Doors company. Okay, usually it's a good idea also to save a phone number. Okay, and then we're gonna continue. So that's basically the basic information. Main telephone number, the address, I have everything in. Then you have on the side tab with a few more tabs: payment setting, tax setting, account setting, and additional information. Remember, you're doing accounts payable. So I'm not so worried about credit like I'm doing it on account receivable. Account receivable, when I give a customer 500 credit, it means I'm not selling him above 500. If he has such bad credit, I'm not going to give him $2,000 on credit when he has a credit of 500. But accounts payable, I'm not that careful because, again, I'm getting, I'm the customer in this case, and they're selling to me. So it's more for my information to know if I have a credit. So I go to payment setting, and sometimes they give us account number and sometimes they give us payment terms. So the book does give us account number, that every person every year has account, and payment terms will be net. Hi, everybody has the sound back? Okay, so I'm showing net 15. I hope everybody can hear me. You lost sound again? Okay, I'll go back. Again, basic information is here. I hope you heard me. I'm just saying that credit information is not important because you're not the customer. Over here, you're the vendor, you're buying. So my point about customers, I went here. Net 15 is important. Yes, I want to know when I have to pay my bills, but I left credit limit empty because it's really not important. As a customer, I told you it's important, but from the vendor point of view, if they want to sell me for 10,000, but I know my credit is only 2,000, it's their fault. It's just not important for me to really write it down. I can buy as long as they give me permission to buy. So credit limit is really not important, not stopping you at all. They will not say, okay, you went over the limit. In customers, it will. Okay, so my point is that it's really not important, the credit limit, and then you can leave it blank. Now, what is the billing rate level? I hope everybody hears me now. How did you lose? Can you hear me now or still no? Because mine is not muted. Okay, thank you. You can hear. Okay, so is for discounts and special deals. So if I would go here, I might enter something. I don't think they have anything. But the point is not every customer is exactly the same. As you know, if somebody buying in commercial compared to residential, you might have different prices. If I buy as a construction, just the one window in my house, I'm not going to get a very good special price on that window. But if I buy for an apartment building 100 windows, I for sure will get a special deal. So that's the rate level. We're not going to use it, but you should know it exists. Then we go to tax setting. What is a tax setting? And I want to discuss what does it mean, a 1099. Okay, some of you might know that 1099 miscellaneous income is income that a vendor working for, and he has to pay the taxes himself. He's not my employee. Those are called independent contractor. So especially in construction, they have a lot of them. Okay, so they have construction company, basically that has a lot of subcontractor. I'm going to call a plumber. I'm going to call a roofer. I'm going to call anyone I need when I need them, but I don't keep them on my payroll. So they're not an employee. They are a 1099 employee. Okay, so I'm explaining what a vendor with eligible for 1099 means. If I write vendor eligible for 1099, over here I might have a social security number. A social security number that looks like this. I don't remember if it's 7 digits or 3, something like this. That's the style. Or another way of putting it, you can have employer identification number. Okay, 9 digits. Something like this. And that's the 2 styles that will be accepted as a vendor tax ID. So at the end of the year, let's say every time the painter came to work, I paid him $200. So it's accumulating. And at the end, I'm going to give him at the end of the year a 1099 miscellaneous. And he's responsible to pay taxes on his own because he's an independent contractor. Okay, so independent contractor means the person who works for himself. He's not a payroll employee. So he doesn't have benefits of unemployment and things like that. He works for himself. He's not on my books at all. I call him, I hire him. He's giving me something called a W-9 information. The W-9 just says what's his tax ID number. So his social usually, or employer identification number if he opened up a company. But he's not on my books and he takes the full amount. So if he says, okay, if $1,500 a week, I have to pay him $1,500 for the week. I'm not deducting Social Security, FICA, anything, because he's not my employee. He's self-employed. Okay, so that's it if the vendor ID is eligible for that. So you make a check mark and you put the number. Okay, what type of a vendor is this under windows and doors? Let's see. That's an additional information. I go to I skipped account setting. It's not important now. Vendor information, from him, we buy materials. Okay, who would definitely get a 1099 miscellaneous? If you wrote subcontractor, for sure they have to get 1099 miscellaneous. If you wrote consultant, for sure this person works for himself, and as a consultant, you will get a 1099 miscellaneous. So if it's like a red flag, if you wrote a consultant or a subcontractor and you didn't give a 1099, that's a question mark. Why didn't you? The amount is usually over 650 a year. So if the person made only 200 once only, it worked for you, okay, overlook it, you don't have to do it. But if the person made more than 650 a year, you definitely have to give a 1099 miscellaneous. Okay, so this is not a must, but the book is teaching it with materials. So we go with materials. We buy materials like windows and doors from Andre. One more thing I want to discuss is right up here. Opening balance. I'm leaving it as 0. But if I put any amount over here, what's going to be, let's say if I'm putting 200, okay? Or let's say under windows and doors, 500. I'm creating right now an entry as of December 15, 2022, or if I would say 2021 even, I'll go back and say last year, we owe him $500. So that's an opening balance for accounts payable. That's what you're doing here. Now you use this only once a year when you're coming from a manual accounting to computerized. Otherwise, you're not going to use it, because what this creates is a temporary account called uncategorized expense, because you see, it doesn't give you a debits and credits here. All he's doing is really making a credit for $500 to accounts payable, but the credit, he doesn't know what the debit is. So he's making up a new account called uncategorized expense. And you'll have to be very careful with this. So most of the time, if the book didn't give you beginning balance, make sure to leave it as 0. That's the best. Don't type anything. But if it did opening balance 500, this example, and I'm making it as 2021, I'll prove it to you. I created something funny called uncategorized expense. So I'll go to the chart of accounts and I'm going to look for an expense called uncategorized. Here it is. Uncategorized expense, 89,800. Because it's last year, it shows me December 15, 2021, I have $500. That's the $500 that was created. So it looks like an open bill, an open invoice, really a bill, but it says uncategorized expense. Okay, so what's usually happening, we will adjust this to opening balance equity. if this happens, opening balance equity, because it's an opening balance. So it goes straight to equity. It's last year. Otherwise, if you left it as uncategorized expense, it will look funny on your income statement. And it would look funny on your return earning. It might cause a loss if this was the first thing you ever did. So it's going to affect two places, this opening balance. Okay, let's see in expenses. Okay, so expenses, if I'm doing 2021, I have to change the dates to 2021. Okay, first year would look like this. And categorize expense, 500. Okay, and of course it's a temporary account, it gets closed. So it gets closed, it means it went to the balance sheet. Let's look at the balance sheet at the bottom. Okay, you don't see it because it's in retained earning. Okay, so the number, it reduces retained earning. But the best way is really to get rid of it inside this account, capital stock, opening balance equity, this account. So you would learn this again, how to get rid of this opening balance. Okay, so that's the best two steps. To get rid of it is to offset opening balance equity. For us, in the meantime, I'm going to delete it. Okay, I'm deleting this bill because he has zero balance. So we'll go back. No beginning balance at all. No uncategorized expense. Okay, this will be zero now. See, it's all zeros. Nothing there. And I'm going to go back. Okay, so I'm going back to vendors. And I have here under windows and doors without any activities. See, they're all zero. And I finished the first part. Okay, so we finished with Andre. We have him as entered bill and it's all in the computer. I'm already on page 300. If you want to look at vendor list, they're discussing reports. You go to vendors and payables, and you're going to have a vendor list right there. Summary, and you have vendor list as vendor phone list or vendor contact list. Okay, that's one way. You also have the vendor list from here. Okay, one second. And you can take this whole vendor list and export it if you need it. So export vendor list up there. Exports vendor list to Excel, and you're going to get an Excel. Okay, it cannot be open right now. Doesn't matter. I also have Word, and I can prepare letters to all vendors. Or prepare vendor. I can even make one letter for just Andre. So I could tell him, a credit request. I'm asking for credit. My name, Rick Castle, owner of construction. Okay, so RC Construction is the owner, and it's creating the letter for me. Okay, so that's the benefit of Word. If you missed it, I did it in chapter 4. So it's created a template, and right away it made me a letter. I didn't need to take a pencil, copy any information. I'm right away in it. Okay, so right now I'm sharing the letter that was created. Okay, so here's the name, the address, the phone number, everything without the phone number, but regarding my account. And I can ask them, please send us an application that we can open a credit account, and we would like to establish credit terms. And then thank you very much. And of course, it's my name, Rick Castle, and the owner and the construction company. Of course, you can edit and change it. If you don't like to see chapter 1, you just want to see Rock Castle, you can change it. And then print the letter, okay? So that's the example that we have on vendors. So we just finished vendors. Let's go back to QuickBooks. And now we're ready to buy. Okay, under windows and doors. So that's the vendor transaction. Now we're going to go into enter bills, pay bills of regular bills. And then we'll go back to Andre because I'm going to create an inventory. So I told you I have to teach those two together, 6 and 7 at the same time. First of all, it's accounts payable, but also there's nothing much to teach in 6. It's really just this. Go to the main screen, enter bill, and then pay the bill. Okay, so that's the two things we're doing now, and that's chapter 6. Yep, we're still recording. Excuse me. Okay. I'm doing enter bills and pay bills for regular service bill, which is the example will be utilities. So enter bill, then it's going to be a water bill, Bay Shore Water. So I'm choosing the company name. Everything works. It's called the primary keys. The connection is always by the vendor. So Bay Shore Water. You'll see that it pops up a lot of different choices. We're not doing California Goyas and we're not doing other stuff. So Bay Shore Water, the bill came for $54. So I'm coming here and changing for $54. And the date is December 24. So I'm following exactly the book. Okay, so that's the bill date, $54. And it's not complete. I cannot save until I have an account. You always have to realize in QuickBooks, we need to think of debits and credits. This is not a typing class. It's not just, okay, $54, water, I'm done. So $54, yes. Bay Shore Water you wrote, but you didn't write which expense it is. What is debited here? So in this example, of course, it's got to be water. It cannot be all the time just to make up expenses. I have some students that use during the test, ask my accountant. Okay, I like that account, ask my accountant, but I don't want to use it during a test. Remember, you're the accountant. So if you use ask my accountant, you don't know what you're doing. It's definitely not that. You need water over here, and you see that water is under utilities. This is correct. So this is the water bill. Another very important point is reference number. A lot of people don't know what it's for. This is a water bill that comes and their invoice number has a reference number. So if their invoice number, reference number is 23456, then, or 11 or something at the end, this number is unique to this bill of December 24. Next month, I would get a different invoice number. So it's very useful to put the reference number because the computer will help you and say, you have this reference number already and it's duplicate. How does that happen? Let's say my employee who does accounts payable was out sick for 3 days. And I hired somebody else to start doing accounts payable. So she's putting all the bills. She didn't know if it was entered or not. And then the computer tell her it's already exists. So that's a red flag saying, don't do it again. Don't duplicate. Okay, so it helps you a lot, that reference number. It doesn't read this box. It's not enough that you write here, invoice number. It's good, but it's not reading that box. Okay, the cell that is really sensitive is always reference number. Not here and not here. You can write that number many times, but it's really not reading it. Okay, so that's the information about reference number. Another very important little check mark, bill received. It means you have the physical check, the physical bill. It's not just on the phone, you're gonna get a bill of $54. You have the bill and the bill is actually there. So there's paperwork, I have the paper, and when my boss has to pay the check, he will have to see the bill, the original bill. So that's what this check mark, bill received, really doing. That's like a voucher system being a check mark. And then you save and you go to the next bill. Okay, other examples of regular service bills would be, let's see what else they have. Okay, I'll do it from my head, another example. Okay, let's take Davis Business Associate, $200 for advertising. Okay, then I realized I don't have advertising. Okay, I see, I don't have advertising expense because I didn't save it in chapter 2. So I'm gonna set up as I'm working, I could set it up. Advertising expense is an expense, and I can come up with a number. I don't know, maybe 6,001. Really not important. Okay, so I have advertising expense. It's in the computer. It's good. See, ask my accountant. I can even delete, but I don't want to use this. So advertising expense is used. $200 for advertising. Davis Business Associate. And I'm changing the date to the 26th. Okay, so I did 2 examples of bills that are both for service. Advertising is service. Let's say you have your accountant sending you a bill. You're going to choose here professional fees. And sometimes you have on professional fees 2 different sub-accounts. If it's an accountant, you choose accountant. If it's your lawyer, legal fees. So you see sub-accounts of professional fees? That's if your accountant or your lawyer sends you. Of course, it's a service. It has to be here. Okay, so what happens next? So we enter 2 bills. One is for $200, the other one for $54. Where are we going to see them? That step 1 is complete, the enter bills. We will see them at pay bills. I click on pay bills. And now you'll understand what I was talking about when I said it's a very good control of how much you're spending every month. If I just enter the bills, and then in one day send all the checks, I'll know how much money I have and if I can cover everything. But when you write checks every day, you will not keep track in your head how much you're spending a month. So it's a good cash control for budgeting to know how much you're spending on accounts payable. So in this example, you have CU Electric, you have Bayshore Water, you have the California Gas and Telephone and lighting companies and many different things. But the bottom line is here, 23,431.72. And the checks on the bottom says how much money you have in the bank before you're writing those checks. So it says here ending balance 54,406. This is show all the bills. If I decide to pay all the bills, I'm just making check marks by select all bills. Okay, remember we owe 23,431. Keep on looking at the money and you'll see that it went to 30,000. Okay, I'll do it again. I'm going to clear selection before I have 54,000. If you select all the bills and pay all of them, you have 30,975. So that tells you that all those checks could be covered. But let's assume this company have a little bit cash issues. They're a little bit tight. They say, no, we need 30,000 for payroll. You cannot pay so much. So fine, as a controller, I can decide to please everybody. What does it mean? I'm selecting one bill for each one. Because if I said CU Electric right now together, they're getting one check of $750. But they don't have to get the $250. It's not due yet. You see, it's January. So I can choose and say only 500. Same thing I would be doing in the next one. Not when I see two on the same company. So I see California Telephone. Okay, that's only one. And the lighting, I see 2. So I could choose to pay only the $52 if I don't have money. Okay, you see how I'm working, and then I'm continuing down. I'm going to please everybody. And I can also change the amounts if necessary. Change the amount over here. Let's say I told him, okay, Mr. Hopkins, I'm able to pay you only 300. So I could type it here. And I'm sending him only 300, although it's 550 the bill. Okay, so that's what it means by paying some. Other things that can happen, if they gave us 210 net 30, the calculation of discounts will happen here. Okay, but we don't have discounts. We only have net 15. So you don't see the discounts right now. I can't show you calculation of discounts. I think nobody has. Yeah, net 15 or net 30, but they don't give calculation of discounts. Oh, I saw one. Okay, here's 110 net 30. Let's select that one. It's $1.15 discount calculated. Suggested discount. So let's check it out. Discount used, $1.15. So amounts to pay is $113.85. So now they need an account. You could choose discount account of, I think that can go from job materials because it's lumber. And we say done. Okay, so you see it's 115, $1.15, and 113.85. You have to be very careful if it is suggested. One more thing about discounts. I usually don't let the computer choose and really calculate discount because I have to look at the bill. If it's, let's say, 800 is the actual material and $200 is delivery, you cannot calculate 1% on the whole thing. It has to be only 1% on the 800. So always, I calculate the discount myself and look back at the bill if there's shipping, because shipping is never discounted. Freight, shipping, all those expenses are not discounted. Just the goods are discounted. When they say 1% 10 days, it's only on the materials. So that's an important point that a lot of students don't know. Don't let the computer calculate. You need to calculate and look at the bill again. Okay, let me clear the selection and we're going to work with the book because the book tells us to pay only one or two things. So we're not paying so much. Let's continue. Okay, they want us to pay just Bayshore Water and actually print a check. Okay, so we're not going to print the check, but we will do it. So I'm going back up. We're not paying the whole 23,000. So what you'll see is, let me minimize this. Okay, over here, you're going to see $54 only. So I'm selecting just $54. And from the bottom, we're writing the check date. Okay, so your check date should be December. Let's make it 25th. And it's to be printed or assigned check number. You have a choice. Okay, it didn't give us a check. Fine. So to be printed, you can leave. If I said assigned check number, you'll have to come up with a check number. So to be printed, pay, and you're done. Where will I see this check? First of all, you have permission to continue writing checks. If you like to do another one that's not in the series, no problem, you go there. And you could do pay more bills or just say done. So where all our check goes, they all go to your check register. So we're not looking here, we're looking here in the green check register. We're going to see it as a check, but without a check number yet. Okay, you see the word to print right there. I paid California gas somehow, but if I want another check number, I'll just type it like this, 519, and now it has a number, and I'm going to record it. So to be printed, you can always change. If you made a mistake and you write a check number. Okay, so we have check 518, this one is 519. And now we're going to the chapter. Okay, if you want to see the transactions of what I just did for Bayshore, reports, I could show you it in journal. That's easy to show journal. Okay, so I'm doing only the dates that I want, which is December 24, I think I did, until December 25 or 26, let's say that. December 24 until December 26. Let's try. Okay, so Netielo Ernesto, I don't need right now, $54 and $200. Okay, so let me change this one to the 28. I just want to show you two and not get so confused. Okay, so 54.54. This was a sales receipt from last week. So when we move it from account receivable, I'll change it to also 29. Very sensitive to date. That's the reason it's easy to fix. Okay, so this is the journal I want to show you. When we enter the bill and then we pay the bill. So that's the two transactions we did today. They're both of, excuse me. both accounts payable, 54 and 54. So we see accounts payable credit, so we enter the bill. Water is an expense, then that's the number, tells me it's an expense. Then we after a while, couple of days, here it's a day, a weekend, and we pay it. So 54 accounts payable going down, debit, and checking going down, that's a credit. So this is saying bill payment. It's also the way we write checks. So if you wrote check, you would have only this transaction with water as debit. That's the one step. If you did it in 2 steps, you will have 2 journal entries. So enter bills, pay bills. Very important to follow the book when they ask you to enter bills, pay bills, because I'm looking for 2 journal entries, not just 1. That's by following the books. So it depends on the style of the business. Most businesses must do it this way. Enter the bill and then pay the bill. 2 steps, and they don't use write checks at all. They hardly ever use write checks. Only in emergency, they have write checks and right away printing a check. So most companies work with enter bills and pay bills, and this way they control how much money they spend. And they usually issue checks twice a month, on the 15th and the 30th, let's say. It's just easier for them to know that the boss is going to be reviewing bills those days and processing them, and not to be busy with every little check every 5 minutes. He has other things to do. So that's usually to get them signed. So we just finished chapter 6. We're talking about reports. You go to vendors and payable. Vendors and payables, and then you could look at aging. You could look at the account payable aging detail, aging summary, vendor balance summary, vendor balance detail. I like vendor balance summary because it just shows the name of the vendor and the total right away. And this total, of course, agrees with accounts payable. So right now on this date, it says all transaction on this date, December 29, is 26,636 and 97 cents. So this is your accounts payable. This is the total. And you can see who you owe the money to. Mistakes that some people do. They print this up, okay? So they have vendor's balance summary, and then they totally ignore me. They do not go to pay bill. They go over here and they write a check. I know that CU Electric is 750, no problem. The boss says, okay, so where's the check for CU Electric? I'm rushing, I'm writing CU Electric. I ignore this, a pop-up, and I'm writing a check. Okay, so what does it say? Of course, don't ignore it. You have to understand what you're reading. It's a warning, and if the computer could scream, he would scream at you. Using the right check window to pay an open bill will cause your, in bold, accounts payable balance will be incorrect. What does it mean? If you're continuing writing a check, look what happens. I'm going to continue writing a check. I'm writing $750. Okay, and in the memory, it remembers that usually when you write a gas electric, it's for gas and electric. So he wrote $750. Does it say anywhere on the screen accounts payable? The answer is no. What you're doing is doubling your expenses. You entered those bills already, and you're doing them again as, again, $750 gas and electric. And when I save it, okay, I'll do it as December 25, let's say, so I would find it. And I'm saving this right check, and I'm thinking, okay, amazing, I did a great job. My check is $491, I'm great. Then I look back at vendors. Okay, and I look at CU Electric. To my horror, CU Electric, I still owe $750. But it says here, $750 check. But a check is not connected to accounts payable. What you just did is having $750 utility expense and another $750 utility expense. You doubled your expense for that month. And that's what the mistake is, mistake number 1. And then 750 is totally not applied here. Okay, so it's double mistake. Do not write the check. Let me just show you the correct way. Again, the correct way would be not to write a check. Do not ignore them. Go to pay bill. Select CU Electric with the first 2, and you'll see 500 plus 250, 750. And then you assign the check number, same date. You could do the same exact date if you like, to 27, and you pay. So we're writing a check for 750. Check number 492. Okay. And done. But right now, I have 2 checks in my check register. They're both for CU Electric. They're both for $750. Right? One is done wrong. Okay, this is done incorrectly. 750 gas and electric. And this is done the correct way because it says accounts payable. So let's look at the accounts payable one. Look where I am. I'm double clicking on the balance on the check register. I want you to see that it's paying 2 bills. On the bottom is selecting the 2 bills, the 500 and the 250. Okay, so that's my correct check. And the other one, 750 directly, is wrong. And if I'm leaving it like that, it's a terrible mistake because my profit and loss is going to be wrong. Okay, I like to show you the standard one. My profit and loss standard would have a very large amount. Okay, let's say this fiscal quarter or last fiscal quarter. No, this fiscal quarter. Okay, let's look at how much is utilities. Of course, I'm not looking at income, I'm looking at expenses. Utilities, gas and electric, 1,027. Okay, right here, 1,027. So I have the 750 in small little bills. Let's do it even for more. And I have a lot of little bills. Yeah. I don't know where the 500 is from. It's not from here. Interesting. I don't 500. I don't know, but the point is that you double yourself. Okay, the check is wrong. So let's remove the check and it's not that much money. So I'll go back. Here's my check register and I see duplicates of 750, 750. The one that's correct should say bill payment. And the one that's incorrect is the check 491 check, which is right check to gas and electric. So I'm deleting that one, not deleting, sorry, voiding. I'm voiding that one, it's 0. I'm saving that and it's done. I don't need to write it again. Just voided. Okay, so we finished chapter 6. Again, reports, you can always check vendors and payable. And the first 1, 2, 3, 4, 5, they're all basically the same. Unpaid, all of them will show the same total, just a different way of looking at things. Unpaid bill details is each bill that's open all the way down, and you're gonna see the same totals. They're all based on accounts payable. Okay, why it's not staying down? Okay, 25, 886, 92. That's on December 15th. So on December, let's say I need the 31st, the end of the year, how much is accounts payable? Accounts payable at the end of the year is 26, 086, and 92. All of them will show the same number. Reports, vendors and payable, aging. It's just by the age of the invoice. So again, we do aging at the end of the year, so the 31st. And it's the same number, 26, 086, 92. So just different way of looking at things. This is the one that we're really late. Okay, we only late about 30 days to this one. The rest we're all current. Okay, let's check another one. You also have accounts payable graph. It takes all these and sort them out and show you which one you owe the most. Perry windows and door and patent hardware supplies. Both are very high. And the next one in yellow is Surgeon Insurance, the insurance company. Currently, all your accounts payable are really current. 1 to 30, I showed you it was like about $3,000. So if you click on this, right mouse click on the Z, you were supposed to see amount. Okay, it's not doing it. Let's try it again. Okay, somehow it's not working for me, but it should show the amount. No, it did something wrong. Usually when I move with the mouse, it shows the amount, not just slice. Okay, so vendors and payable, accounts payable graph. Oh, it did work. Here it is, 3,459.20 cents. And this huge amount is 23,177.72. So right mouse click with the Z will show you how much money it is, not just the graph. And each slice the same way. Right mouse click on the slice will tell you, because over here you have the percentage, you don't have amount. So if you want to see an amount, okay, I'm scared of doing this. Something is wrong with mine. Okay, so let's continue with something else. Okay, we're done with the reports. The first section of the reports, vendors and payables, and all these. Then the 1099 that I explained today. 1099 summary is for the people that needs to get a 1099, independent contractor, self-employed, and things like that. Then you have tax liability and sales tax revenue, with, of course, it's created by a summary from the revenue account. So Chapter 6 talks about accounts payable summary and 1099 that you want to read. Then they make you enter another bill for California telephone and to pay that bill. And that's the exercise. Okay, so in Larry Landscaping, you're creating enter bill, pay bill. That's the end of chapter 6. So of course you have to do 6 and we're going into 7. Now 7 is a little bit different because we're starting inventory. Okay, so we're buying 2 pieces of inventory that we didn't have it before at all. Okay, so the first thing I want to show you is how many different windows we're going to use, because we just used in 6 just this: enter bills, pay bills, and of course we entered the vendor. So vendor I'm not reviewing, I'm just going to start using him, but I'm going to do many more steps. Okay, so the first thing I want to share is the PowerPoint. Everybody can see the PowerPoint. It's chapter 7 this time. Chapter 7 is about inventory. You have to understand that inventory feeds both systems. It feeds account receivable with sales price. It feeds inventory as we enter to the cost price for purchases. So it's how much we pay for it and how much we sell it for. And of course, the cost is much lower than the sales price, because between we have something called markup. We mark up the price. I buy something for $3, I sell it for $10. I buy something for $70, I sell it for $100. So a window that I sell for $100 cost me $70, and the difference is my profit of $30. That's in a nutshell this chapter. So you see that it feeds both systems, the customers and sales and vendors and expenses, both of them using inventory. If you don't have inventory, you will not be able to make a good invoice. If you don't have inventory, you cannot even buy what you need. So the first step is to enter the inventory to the computer and say, this is what I need as a model, and then I can buy it. I can start ordering it. So enter in a shell, and then you will be able to buy it. So that's the first step. So it's, again, we're reviewing together vendors and customers transaction, but I'm concentrating right now just on one topic, which is item list. Okay, I'm not going to do much more than that. We will continue next time, but item list I'm going to enter. Okay, so vendor, purchase order, our company, we sell product to customers and it goes to the customer. That's basically the transactions. Okay, so what do you need to know? That it's a lot of steps because it's minimum 4 steps and 5 is not connected. So that's what they're teaching in chapter 7. Step 1, purchase order. Step 2, receive inventory. Step 3, the bill comes in the mail. So you enter the bills against the inventory. And step 4, you're ready to pay. Now, all these steps are usually in different days. But this is a very good 5 steps that are following something called the voucher system. A voucher is being prepared, a paperwork is being prepared, and you have more documents inside. If I just get a bill, you got 5 calculators, please pay, but I don't have a receiving inventory, somebody signed that we received 5 pieces, why should I pay? If I'm not sure I received, why should you pay? Imagine you get a bill for New York Times, you never saw the paper at all, 27. Don't pay until you get the New York Times. If you pay, that's a suggestion. If you pay, you're going to start receiving. So many times it's not really an invoice. You have to really be careful. They say invoice, but it's not an invoice. This is just a proposition to sell. And of course, only if you paid it, you might get it. So enter bills against inventory is for sure when we receive something in the mail and we're going to compare it to see if we got. So we got the mail, in the mail is the invoice, but against inventory. Now, why it's so important to keep track of this paperwork? Because could be that you got the bill on Monday, but the merchandise is only going to come on Thursday in California. I'm not going to pay on Monday before you get it. This concept is especially important in service. I'm ordering a performer for a party next week. So the performer will get paid $500 before he comes. Would he even show up? If he has some integrity, might, but we don't pay before. We pay on the day of. After he performed, here. So remember to pay after. Okay, sometimes it's big mistakes. Okay, you get in and out of the meeting, so just came back, I'm sorry. Anyway, this is the steps. Step 1, purchase order. What else do we know about purchase order? We only making an order. It does not cause accounts payable to go up. It's only non-posting. I'm reminding you because there's no journal entry on purchase order. The entry for journal entry starts really here at receive inventory. When we receive inventory, it does debit inventory and credit accounts payable. So that's step 2 starts accounting, not step 1. Step 1 is just to make a phone call or I send a paper, but it could be I get a phone call back, I don't have it. So it does not cause any accounting. Remember that step 1 does only non-posting. So if you still don't understand what I just said, non-posting means no journal entry, does not affect my general ledger. So it does nothing. That's step 1. Step 2, accounting, starts the accounting. Okay, step 5 over here, managed sales tax is not related. It's just how to pay the taxes. Okay, so the next thing we're going to do is start looking at the items. And where are items? List items. It's under chart of accounts as items and services. What type of items do we have? We have service items like cleaning, let's say. That's a service because I don't sell you anything. I'm just cleaning for you and I'm charging this much per hour. Next one is inventory items. That's I actually have a piece of inventory that's tangible and you can sell it to other people. So if I'm selling you a window and you don't like the window, you technically can sell it. Non-inventory items is something that I don't keep in my stock, but I need it. An example for a contractor, non-inventory item will be a refrigerator that he buys to a customer to make in the kitchen. So he says, okay, I'm charging you for the customer, but he charges usually almost the same as he got. So if this refrigerator is custom made, I don't know, very special size, maybe it's $950 and he charges $1,000. He rounds it up. So he made $50 on it because he custom made it with his cover to look exactly like your kitchen. So your sub-zero expensive freezer looks exactly like your kitchen. So that's the example of non-inventory item. Okay. So I'm going to show you an example of entering service item, and the screen is very different than inventory item. And non-inventory item, you really don't hold in stock. You just buy and sell on the same day. So you don't really carry it as inventory. Okay, enter bills, pay bills. And of course, this is much longer now. Purchase order, receive inventory, enter bills against inventory, pay bills. So we will see 4 different screens. So we're starting with step 1, always purchase order, goes into step 2 when you receive inventory. Step 2 comes with two different style because this is again, what's happening in business. What is happening in business? I get a box, Sometimes when I open the box, or I have a packing list on the top of the box, a little pouch that says this is the packing list, and the second one says invoice. So sometimes I receive inventory and they saving time and money, and they right away send me a packing list and a bill at the same time. So the bill says invoice with the prices and everything. But sometimes I have to wait for it in the mail. So it depends. In most businesses, we're going to receive inventory without the bill. That's on a Monday. And Thursday, the billing comes in the mail, the invoice comes in the mail. So usually the bill comes later. That's most businesses. But sometimes you open the box, sometimes the invoice is in the box, so you can save time. If you receive the inventory with the bill, you're saving time. You don't have to do the next step because you're just writing with the bill. I got the bill and I say receive bill. So you will have a little check mark on that. They're showing you it in 2 steps, either way, that you have the 2 decisions to make. And then if you didn't receive the bill before, now it's time to receive the bill. So the bill came on Thursday, merchandise came before on Monday. So Monday we wrote, we received the inventory. Now we're writing that we got the bill. And then the last one, we paid it. We have to go, and the pay bill is the same as I just did in chapter 6. Okay, manage sales taxes later. So we'll go back to it later. Okay, so let's continue with examples. The first thing I do in QuickBooks, I want to show you where is the list. So chart of accounts is here, items and services is here, right under. Okay, you'll see that you're in item list. You would have the name of the items. See on the top, it says that you're in item list. Okay, so again, it's under chart of accounts. This is the icon for items and services. Also, a list, item list, the second one under chart of accounts. So you remember that it's under chart of accounts. Okay, so we are an item list. The groups, the first group is service. Service is the most common one, and it's basically you're just doing service. Like repair is a service, installation is a service. And next, after comes the inventory part. So the screens are very different. I'm going to show you an example of both. I do item new. The best one is service, the easy one. You did it in project 11 when you wrote social, what was it? Consulting something. So you just wrote consulting income and you basically wrote the amount here. So most services are not taxable. You switch it to non-tax. So example of service. Let's say I'm doing cleaning. Okay, cleaning, hourly cleaning. I can write special, post-construction. So it's not the regular cleaning of a house. Post-construction. Okay, so if it's post-construction cleaning and it's really more work, I'll charge $20. And it's not taxable, and it goes to an account. So here, of course, is income account. All the income accounts should pop up. Which one makes sense if it's a service? The answer is labor income. It's my work. All the $20 goes straight to me. Cleaning. Okay, there's no, okay, I paid somebody else to do cleaning $10 and I made $10. No, it's my $20. So cleaning, the service goes completely to me. And it's okay. Let's say next, I'm going to show you next. Okay, if I say okay, I want to show you what the cleaning is. You see it's service, it's on top. I can even sort it really. No, maybe it's better not to sort. Okay, let's leave it like that, the way it was. So cleaning is a service and I'm charging $20. It tells you the account. Okay, so the account is here. Construction income, if you touch it, it's say labor income. So we're done with this one and it shows the $20 that I did. Okay, now I want to show you inventory. An example, let's look inventory. Okay, inventory, cabinet pulls. That means the handles. Cabinet pulls is a handle. It costs $3, they say. Sales price is $0 because when you sell on the invoice, you might write $10 and you're making $7. You're for sure not selling for $0. But I want you to notice something else on the screen. All these open up many more different accounts right on the screen. You would have cost of goods sold, income account, and you have the vendor that you're buying it from, and you also have the inventory account. So there are 3 accounts right away. And another very important part, average. So QuickBooks by default is not doing LIFO or FIFO, it does average. If you don't like it, you don't like average, you can buy a product that's inventory, then you will have the choices between LIFO, FIFO, and average. But QuickBooks by default does average. So even though if I'm saying I'm selling for $10 right here, you will not make $7, you'll make more because it's 2.559, that's the rounding of the cost of goods sold. So this is the cost of goods sold. You'll be making more than $7, $7.44 about. Okay, so that's the example. Let's go to a new one and you'll see how a new one looks. Okay, so I choose item new, like chart of accounts. You could do Control-N, or you could do item new. See, it's the same codes. Okay, now I'm following the book exactly. What did they buy? Okay, they buying doors, special doors that they didn't have it before. Sorry. Okay, so now switching for inventory parts. Now right away we see many different pop-ups. So the name of the door is called bifold door. What type of door is it? It's a sub-item of wood door. Manufacturer is BD42. That's like a code on the box, like WD40 or something like that. Description, bifold interior door. Bifold means it folds in two. Bifold. Bifold interior door. If it's the same, it just copies. So now I'm discussing what does it say. On one side it says purchase, the other side says sales. Sales will go into your invoice. So if you'd like to write that this is painted white and weighs 10 pounds doors, I don't know, it's just an example. I'm sure it's more, but you need an example over here. Maybe it's 18 pounds, let's say. So this will help the next person when he sells, and he will ask me, how much is shipping? I know already that it's 18 pounds. I will be able to do it. I can also write down, it's on aisle number 5 and things like that, the location of the box. So the more I write, the better it is. But this is enough for the purchases. So for purchases, when I'm ordering, he knows by BD42 when I'm ordering. Notice that it's taxable. This is definitely taxable. It's not a service. So now they're giving us prices. You're buying for 45, you're selling for 72. Be careful with the prices on both sides. If you miss the cost, it will be major mistake because your cost of goods sold will be 0 and you have all the 74 as profit, 72 as profit. So it's a mistake. You have to be very careful, always, never to leave it as 0. Now we're checking the account. Cost of goods sold is correct. Where do you buy it from? The guy that we typed before. Andre Windows and Doors. So now you see the connection between 6 and 7. That's the reason I'm doing it together. And we'll be done in a couple minutes, 5 minutes. Andre Windows and Doors. Income account, because I can't show it and then, okay, we'll forget it and then come back. So if you need, watch this video again. So again, I need to know all my accounting. Cost of goods sold, and I need accounting for income account. So it has to start with a 4, construction income. But which one is this one? This is we making money on the materials, on the door. Because we're charging more than we buy it, we're making material income. So the correct account is materials income. Okay, 4140. Again, it's not from my head, it's all in the book. Okay, here is inventory. Inventory goes down when we sell it. Reorder point minimum. We should have 2 in stock or maximum. No, let's do minimum is enough. And on hand, we have nothing. So 0, 0, 0. Everything is 0. I just need to create this to be able to order. So now I'm going to do next another one. Okay, so we're buying a special bifold doors. It doesn't like the bifold. So add it to your, fine, it's a correct spelling. We also need bifold knobs. So I'm typing bifold knobs, special hardware, sub-item of hardware. Manufacturer part is BK36. We're going over here, and it's hardware bifold. Let's say bifold door hardware. Again, if you want to write more, always write on this side more because that's on the invoice. If it's painted white, it's metal, I don't know, or steel. Let's say it's a steel. Cost. Okay, we're spending $6 and we're selling it for 13. We definitely know how to make money. So $6 here, sales price 13. Cost of goods sold exists, no problem. We're buying it from Patton Hardware Supplies. And it's still materials income, I'm just double checking. Okay, minimum 2. Remember, if we have 2 in stock, so we should have 2 also on the handles. Okay, the rest, all this on the bottom, if you didn't learn any cost accounting, I'm not really discussing that, but it's based on economic order quantity. It's called lead time, how long it takes to get something. So all this managerial stuff, you don't have to know, but that's down here. Okay, so all I created is a 0, 1. I don't even have it. You see, I have 0 on hand and 0 on hand, but I created the 2 items to be able to do it. So I'm going to replace the word painted because I spelled it wrong, and done. So I have bifold knobs under hardware. See the sub account, and I have a bifold door under wood door. But you'll notice that you have nothing. You don't have any. See, it's 0. The price is 72. Same thing here. Painted white, 0, 0, 13 is your sales price. So you notice on this window, you will not know how much is your cost. If you want to check cost, you don't see it on this screen. And the reason is really curious customers. When you have curious customers and they look over your shoulder, let's say I'm in Home Depot and I'm next to the person who's doing it and is checking inventory. If I would see that it cost him $2 and I'm paying 15, I'm going to be asking for a discount. So that's the reason you will not see the prices. Okay, is it clear that this is the reason you don't see cost? Only if you want to check cost, you could double click on it and check that you type the 45 and the 72 is only showing. That's one way. Another way is a report. You go to report, and this time it's inventory, so it's under inventory. You can have inventory valuation summary. Okay, let's move it a little. And you will see inventory valuation, average cost, things like that. It shows you the average cost. Okay, right here. Average cost. Then you see the sales price and how many pieces on hand as well. Another report. Purchases. Okay, so you can do it by, I'm looking for the list, not inventory stock by status. It's purchase item. Yeah, I think it's the summary one. No, this does not show cost. I need it in lists. List, item list. Okay, here it is. List, second one, item price list. Here's your price list. Okay, so here's to check the price list and the sales price. And the book shows you another report. So every one of them in an image in a book. So I just finished page 336 in the book because they say that before you continue, you should click on item, resort the list. That's what they're talking about before you go to any report. Okay, so before you go into any report, always resort your list. Okay, so now we can start doing the purchase order and we'll be done. Okay, maybe we'll do it to a different time. We'll do it Wednesday. Okay, so let's stop here. I want you to practice on inventory just to enter it. Remember, I have 0. I don't have any yet. So on Wednesday, I'm going to continue with this. I'm going to start with purchase order, receive inventory, enter bills, and pay bills. Okay, so all this 1, 2, 3, 4, we're going to do really on Wednesday. So most of this chapter is 6. We're just done in chapter 6. Because I don't want to do those steps and you will need review anyway. So if I need purchase order, I would be clicking on purchase order first. All works by the vendor's name, like that, by the name of the vendor. And I'm going to show you back. Okay, let me erase. Here's an example. I'm going to enter the purchase order and it will say if I got it or not, how many pieces. Okay, example, quantity is 144 lumber, and you'll see received is 0. So it means they didn't get any yet. They just ordered 144. Or here, 2, and they received nothing, 0. Okay, you see none received. If it received, let's find one that's received. Okay, here's one that's received. They ordered 9, they received 9. It's a closed purchase order, it means it's done. And you'll see the word received in full. So the word received in full happens by itself from the next step, received in full. And if you didn't receive in full, you would have something called back order. Okay, so some of them will be on back order. This is received in full, received in full, received in full. I'm looking for something with back order. Here is something with back order. I ordered 5, I received 2, and the rest I can say, okay, I'm not getting it anymore. Basic picture window, I don't need it anymore. I could come and press closed. See, my mouse becomes a check mark and I can close it. So if they told me, okay, you'll have to wait 2-3 months for the rest, I might close it and say, no, I'm going to order by somebody else. So that's the purpose of closed. If I didn't close it, if it says 10 and you received 3, obviously you have 7 on back order and 3 on back order. So I can still receive from Perry Windows and Doors those 3 and 7 on a different shipment, maybe tomorrow. So that's what it means back order. So you're still okay because back orders could be processed. Something, my complaint about QuickBooks in general. Purchase order should say that it should come in a specific day because otherwise you're losing the customer. So they said QuickBooks as common sense, purchase orders are good for 30 days. But there's a lot of people that don't know common sense. So October 22nd, to send it to me in December 27, it's already something I can refuse. I don't need it anymore. So remember the idea of, I'm saying that other pro software are really much better with this, that they have purchase order, where they have a box that says purchase order expires on this and this date, merchandise is needed by this and this date. So it's not good enough. If you're buying QuickBooks with inventory, you have to add those extra custom, you create custom fields because it doesn't say it naturally. Other software have it naturally that says purchase order good until and merchandise needed by and so on. So it's not the best product. Okay. So we're going to continue with this next time. And that's going to be on Wednesday. So I'm going to stop recording right now. You can review it.